built, they have to be protected, things like that. And it's really interesting to do that on the internet because I have my brand, which tends to center around things that are Black, economic, and educational. I believe in intelligence, I believe in wealth, and I believe in Black people and the Black community. But no matter what, but then when you get out really out there, maybe you have situations where your brand gets misclassified or whatever. And the way I defend my brand is I just consistently do a lot of what I do, and I consistently show you every day of the week who I am, what I believe in, where I stand. That's it, period. And I'm very consistent with it. So if you're trying to build a business or something like that, you want to think about what your brand is going to look like. Maybe you start off with some simple brand words that will help you to to identify, to figure out who you are, because before other people can know who you are, you got to know who you are. And you got to be clear about that. And then you got to be okay with who you are. You got to like who you are. And once you like that and you're comfortable with that, then you tell everyone that this is who I am. This is what I do. This is how it may make you happy. Maybe it doesn't matter. This is what I am. And that's what I was telling the rapper Dre Priest. As I said, who are you? Figure out who you are, and then make music and everything else that goes with who you are, right? And then at that point, you can then focus on learning distribution. And then after that, you get into monetization, because there are ways to make money. D1 is one of the best people I know in terms of a public brand where he's able to monetize. He's turned down a lot of record deals because he knows how to brand himself, distribute his brand, and turn that into money. And that's all the science. What's a good trading platform to get started? I think you can get started with Robinhood, Stash, or Acorns. Those are all good, but you can switch around. I mean, there's others out there, but those are kind of three that we talk about a lot in class. And by the way, if you want to check on your membership in the Black Stock Market Program, or you want to see any of the saved content or the other trainings, or what Dr. Boyce is buying, the stocks that I picked this week, I put a new batch of stocks in there for you guys. You can go to the blackstockmarketprogram.com, the blackstockmarketprogram.com. And also the Prime class, we meet tonight at 8:00. So if you want to join us there, where we talk about stock options and the ways to generate income with stock options, just go to my website, boycewatkins.com, and there's a training called How to Make Money Without Working, and that will explain to you what we do in the Prime program, and you can decide if you want to participate. All right, so well, let's start with something. I like to start with economic lessons, and of course, I answer your questions and stuff like that. The one thing that I was reading as I was trying to go to come get back from LA, it was really hard. It was a long trip. I got stuck in the LA airport. I've literally been up for hours today. I was in LA like all night trying to get on my flight, and finally they got me a flight. And then I slept a little bit on the plane, but I've been up like, I think, what is it, 10 a.m. here Central. I've probably been up since about 4, so I've been up for a while. And so if I sound a little sluggish, please forgive me. It's because I literally, like, this is like almost like feels like the middle of the day. But anyway, while I was there, I was listening to financial news, and one thing that I saw that was really interesting was there's a lot of conversation about Elon Musk. And Elon Musk, I think a guy's writing a book about him, and kind of laying out all these thoughts about Elon. And one thing about Elon that's interesting is that he's been able to just curiously accumulate an unbelievable amount of power, just an unbelievable, amount of leverage. So for example, if you go to CNBC, there's an article that says that SpaceX's near monopoly on rocket launches has left a lot of people concerned. And part of the reason people are concerned is, people don't know this, but in the Ukraine war, Elon Musk got concerned because the Ukrainians were going to do an invasion of a Russian fleet. And he felt like the Russians, I guess because he has Russian contacts, they let him know that they might retaliate with nuclear weapons. So to stop nuclear war, allegedly, according to the author of this book, Musk shut down the satellite system so that the Ukrainian military could not communicate, if I'm not mistaken. So literally, at least according to what I was reading, this guy literally stopped, or he feels like he stopped a nuclear war, right? Which that left people kind of concerned, because they say, wow, this guy has so much power. And then they talked about the fact that he bought Twitter. He owns Twitter. So Twitter is a massive source of propaganda and information, right? Whether you're talking about Russian propaganda or propaganda from the Biden administration, there's a lot of evidence that Twitter was being used to promote. A lot of this is coming out in lawsuits now, where they had a direct line to the Department of Justice and the FBI and all that, and they would just reach out and say, we need you to ban this person and block this person and shut this person down. This is all coming out in lawsuits. And now Musk owns Twitter, and that doesn't count also his stakes in the electric vehicle market with what he's got going on with Tesla and everything else. So I think Musk is in danger, honestly. I think that he's seen as a threat to national security. He has deep relationships economically with China, really deep relationships with Russia. And people are starting to talk about this. I've thought about it, and we've talked about it here before, just not in extreme detail. But I've always wondered, how does a guy with that does that much business in China do so well in the United States and not end up getting arrested or dead or something like that? I not that I want that to happen to him, of course not. I don't think it should happen to anybody. But it's just fascinating how this one person has accumulated so much power. So that was my thought on Elon Musk, and I thought I would share that just to kind of talk about like economic warfare and what economic power does. I think it's delusional to believe that America. Let's see here. I don't see Dr. Boyce, but I can hear him. Can you guys see me and hear me? Give me a yes if you can see me and hear me. Let me know if you can see me and hear me. Dwayne can't see me. Okay, you can see me and hear me. Okay, good. All right, thank you. Yeah, I think you might want to turn your camera on and off, or turn the Zoom on and off, something like that. Yeah. So another thought that I had beyond Elon Musk is Apple. I think that Apple is an interesting stock right now. Last week, if you remember, I sent you guys a profit alert via text. If you're not getting the profit alerts, all you have to do is text the word stock to 31996. Text stock to 31996. And I'll send you the profit alerts that way. Or you can also get on my Telegram page, drboycetelegram.com. You can go there if you can't get on the text list. So text stock to 31996. Anyway, I sent you all something where, again, this wasn't investing advice. I don't give investing advice, but I did mention that last week, based on my research, I said, you know what, I think I'm going to go ahead and take a chance and buy some puts on Apple stock. And fortunately, that ended up being the right call. Some money was made. If I'm not telling you to follow what I did, but I think I made maybe a 25% return or something like that. And I didn't invest a ton of money, but it was less than $1,000. I want to say maybe $700. It turned into $1,000 or something. Anyway, Apple is an interesting company right now because there's a lot of belief that Apple is overvalued as a stock. A lot of it comes back to what they call the price earnings ratio. The price earnings ratio is the ratio of the stock price to the earnings per share. And price earnings ratio is designed to kind of capture growth, expected future growth of the company, like how much the company is expected to grow over the next several years. So companies that have a lot of growth tend to have a high PE ratio, high price earnings ratio. Why does that make sense? Well, think about it like this. Have you ever seen a situation where maybe a basketball player or football player, they get into the league and they haven't played any games yet, but they still sign like a $100 million contract. And a lot of the athletes are like, what are you talking about? Like, why are you paying this guy so much money? He hasn't done anything yet. Or when Tiger Woods first got into golf, if you're old enough to remember this, he signed a $100 million deal with Nike. And everybody said, this is crazy. This guy hasn't won any tournaments yet. And basically the reason he got that money was because he had huge expectations for growth. They said, he's not winning tournaments now, but he's going to win a lot of tournaments in the future. And that turned out to be a good investment for Nike because Tiger did exactly what everybody thought he was going to do. Well, Tiger at that moment in his career was like a high price earnings ratio stock. It was like a young growth stock. That's what he was. Now he's not a growth stock anymore. He's not going to win many more tournaments. He's probably not going to ever win another major for the rest of his life. He's made most of his money. He's made most of his billion or more. And so he's a different kind of asset now, right? When assets get to the point where they've already made their money and they're just sort of valuable because they've accumulated things, that becomes more of a cash cow. That's a more mature stage company, right? Like tobacco companies, or ExxonMobil might be in that category. Coca-Cola is not really going to grow. But they know how to make billions of dollars selling cans of Coke, right? So effectively, Apple is interesting because there's a belief that Apple's price earnings ratio is a little bit high, which means that the stock could be overvalued. It could be. There's no guarantees, right? A lot of theories say that this should not be true. You should not be able to pick these things out, but there are people who believe the opposite, who sort of look at things like that. So basically, the Apple price earnings ratio, I believe, is typically on average about 19. I think right now it's like 27 or 28. So because the price earnings ratio is so high, it's got to the point where people believe that Apple could be due for a dip. And what this individual said, which has a lot of credibility in my mind, is that when Apple makes their announcements for their new products, he said, that's not when I'm going to short the stock. He said, I'm going to short it. He said, definitely going to short Apple, which is basically betting against Apple going up. You make money if the price goes down. He says, but I'm not going to do it now. I'm going to wait until after they announce the iPhone 15, all their new features. They get the price bump because everybody's excited. And maybe over the next 20 or 30 days, the price kind of drifts upward. But he said that most major money managers do not believe that Apple is a good investment. They do not believe that Apple is at a price that justifies or is not at a price that could be justified based on their earnings level. So again, there is no guarantee, but if you want to know what I'm doing, one thing I'm going to do is after they make their announcements and when I see the stock kind of take a little bump upward, I'll probably go ahead and buy some put options to make money when the stock goes back down, which I think is probably going to cool off at some point. No guarantees, though. There are no guarantees. So and again, this is not investing advice, but if you do it, just be ready. Be ready for the possibility that it doesn't work out. Okay. But this is the move I'm going to make. The other thing I wanted to mention to you guys before I jump into some of your questions is that there is now, by the way, Mark, I see your question, Mark. Put your question in the Q&A section. And it looks like it's not even a question. Okay, it looks like you got a comment. Okay, well, okay, that's a good comment. All right. Let's see. Trump was doing business with China. Yeah. But I don't want to get too much into the politics today. But yeah, I think all these politicians have dirt. All of them. If you've been around as long as I have, you just see that it's so funny when one of them says, "Oh, he's crooked," but it's like, y'all all crooked. Like, it's hard to be at that level of American politics and not have some issues, right? It's complicated. All right. So anyway, one other thing I was going to bring up in terms of economic concerns is that you have some that believe that we could be on the verge of a little bit of a banking problem, not a crisis, not a crash, not a calamity, but a problem. It's starting with commercial real estate. A lot of commercial real estate developers are basically saying that they can't refinance their loans. And when they can't refinance their loans, that means that they're going to end up basically defaulting or going bankrupt, or, on some of these properties, just giving it back to the bank, which is going to hurt some of these banks because they're going to have to write down the values of their assets, which could lead to a banking issue or cracks in the banking system. The bad news about that, obviously, is that you'd be dealing with an economy that is not as liquid as the one before. I even know some small businesses now that are having trouble getting the same financing that they were able to get, up until, say, 2021, 2022. And so this is going to lead to some sort of an economic slowdown, most likely. Banking, the banking system having problems is an issue. The brighter side of that, though, is that hopefully when the Federal Reserve sees these issues, they will at the very least stop increasing interest rates and maybe even reduce interest rates. But there's no guarantee that they're eventually going to sort of switch and go in the other direction. You remember the last 15 years was a very fortunate period for making money because interest rates were way too low. The fact that they had them damn near zero was not appropriate at all. But they did that, and a lot of people made money at that time. They could easily keep pushing interest rates and eventually end up, close to 10% or something like that. And in fact, there have been times in American history where interest rates were that high. So that's another thing to kind of look out for in terms of what could occur. There are various ways to kind of protect yourself. Maybe if you have some stocks that have done really well, you could get some put options to protect yourself from the downside. Maybe you could shave some off the top, put some stop loss orders in place, orders where you just tell you put something in that says if the stock drops by this much, go ahead and sell it or whatever. But this could occur, or when the dip happens, you could just buy the dip. All right, so let's see. Next question. Natasha says, Dr. Boyce, what's been going on with stock IMBIQ? Let's see here. You know what, Natasha? I apologize. I missed your question. And I should have brought it to class. So let me look it up for you now. All right. So stock IMBIQ. Let me dig this up. Let's see. IMBIQ. Okay. IMBIQ. What's the name of the company? Because I don't see it in Robinhood, so it must be a small company. Can you give me the name of the company, Natasha, and I'll look it up? But I don't see it on Robinhood. Maybe I got to go to E-Trade, but I can look it up for you. How do I take profits from my positions? Ask Carolyn. You can just sell some of your stock. You don't have to sell everything, but there are people that do that when they have a stock or two that takes off and goes crazy. They'll shave some off because they don't want to have too much of their money in one stock. Because remember, when one stock shoots up, it takes up a bigger percentage of your portfolio, which puts you in danger. That creates risk for your portfolio. So mutual money managers, when they have a stock that takes off like that, they tend to sell some of it so they can make sure that they maintain balance in their portfolio. So the same way you want to have a balanced meal, it's the same way you want to also keep a balanced portfolio. Let me see here. I'm curious about this stock, Natasha. IMBIQ stock. Okay. IMBIQ, iMedia Brands. Okay, so this stock is that less than a penny? Holy crap. Ooh, Lord Jesus. Let me put looks like this company's almost dead. Have we talked about this company before, Natasha? Or did you find this one on your own, or have I brought this one up? If so, yeah, this might be one that didn't work out, because this company went down in the last year by 99%. So it looks like it's almost pretty much dead. Let me see here. I'm trying to see let me see what's done in the last 5 days. Yeah, 99% drop is pretty massive. Last 5 days, it's gone up 66% in the last 5 days. Interesting. Down 90. Yeah, this looks like a company that's kind of teetering on bankruptcy. Like it's very close to being dead. Yeah. So if that was one of the stocks that I picked, it might have been based on some research that I did. Now, here's the thing though. If you follow the stock and you like it, and it's not bankrupt yet, there could be some chance it could come back. I mean, it looks like it's not completely dead, but I'm trying to see what news there is about this company. Sheesh. Now, don't forget, when I give you guys the stocks that I like, some of them are going to do well, some of them are not. It's like basketball. Sometimes you hit the shot, sometimes you don't. And so the research is typically based on what the analysts are saying. And so let me see here. iMedia Brands stock soars after company to sell its assets. Okay, so it looks like it's going to sell something. So let's see. iMedia Brands said on Friday that it had crap, I can't read this article. Shoot. Hold on. Let me try this one. If this website will let me read it. No, it didn't look like it's all these are behind paywalls. Okay, so let's look at the stock. I don't know, but you said I talked about it in April. So let me see what it's done since April. IMBIQ stock. Let me look here. 6 months. Okay. Yeah. Okay. So it looks like this is just an investment that didn't work out. And one of the reasons that we diversify is because that happens regularly, right? Again, it's just like if you play basketball and you take 10 shots, if you're a good player, you'll still miss 40% of them. So a lot of times with stocks, what I do is I sort of look at the consensus of what the analysts are saying. And based on that consensus, that leads me to determine where I want to put my money. So if you lost money, I'm sure I lost money with you on that one. But there are other stocks that have done well as well. So it's typically a mixed bag. So yeah, but I wouldn't put any money in that company right now unless you want to have fun and just see what happens. I mean, it did go up 66%. So there are people that did make money by buying it when it was almost dead. But I don't believe in necessarily messing around with stocks that are close to bankruptcy because it could just, die at any moment. That's not a good way to make money. Jay Diamonds, what's your opinion for Armor Residential? Let me see here. Let me open this up. The ticker symbol is ARR. Okay, it's a real estate investment trust. Let's see. It's done pretty badly in the last year. It's gone down 79% in the last 5 years. A company like this, it looks like they make money, they make a profit, but they've been kind of sort of dying off. I don't like companies that are on that much of a negative trend. Just because the only time I would buy a company like that is if I have some reason to believe that there's some catalyst that's going to change what I've been seeing. Because if you see this company, if you've owned it for the last 5 years, you've lost 79% of your investment. So what'll happen a lot of times is that when a stock like this drops to really low levels, if it's like $5 now, $4.92, then sometimes we're tempted to look back and say, well, gosh, back in 2020, this stock was a $20 stock, and we believe that it's going to go up. But we don't know that, right? Now, why do I like ChargePoint? Because I like being invested in the electric vehicle industry. I like what they're doing in that space. And also the analysts believe that the stock is undervalued. The number one variable that determines whether a stock is a good investment or a bad investment is partly it relates to the quality of the company and the way they do business. But really, the number one factor is whether or not the market price is lower than the fundamental value. Because you can have the best company on earth that's making a ton of money, like Apple. Apple is better than anybody at making money. They're the largest company on the planet, but Apple is not a good investment right now, in my opinion. I'm not going to say that that's for sure, but remember, a great company does not make a great investment automatically. It's really what you pay relative to what it's worth. And the reason that that's kind of tough to do is, or to predict with certainty, is because nobody really knows exactly what it's worth. You have information that you can put into these equations, and I've seen all the equations that will spit out a price and say the true price is blah, 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 and the market price is down here. So it can lead you to say, okay, I'm going to buy it because this company's valued at a rate that's lower than what it's really worth. But you could be wrong, right? Maybe the market lowered that price for a reason. Remember, whenever a stock price goes down, it's almost never for no reason. Typically, when a stock price goes down, it's because some information has been released about this company that has reduced the public's belief in what this company is worth. So when that happens, you can't just ignore it and say, oh, well, that doesn't matter. This is the same company. No, it's not. It's not. It's never the same company. Okay. Errol, what effect do you believe the CPI report will have on the market tomorrow? The CPI reports have become confusing because the Fed is sort of the dominant factor in all this. So the CPI report matters to the extent that it impacts the actions of the Federal Reserve. If the CPI report comes in hot and inflation is higher than expected, then that will probably body slam the market, because that means the Fed's going to come back in with that hammer and increase interest rates, which is just sort of banging away on the economy. However, if the CPI report comes in good and it looks like inflation's under control and then the economy's strong as well, but not too strong, the Federal Reserve may back off, which could lead to a massive boost in the stock market. The connection between stock prices and the state of the economy is a really funny connection. So a lot of times you'll have scenarios where we're going straight into a recession, but the stock market is just going crazy. And that's another benefit to being a stock market investor, is that your economic situation is is not directly correlated or directly connected to what's happening with the economy. Okay. All right. Let's see. Another question. What are your thoughts on BlackRock and Vanguard buying up the real estate openly? Um, I think BlackRock buying up all the real estate is going to increase the price of rent. It's going to increase the price of houses. So that's going to be a problem long term. Other countries don't let BlackRock do that. When I was in Europe this year, they pretty much said that BlackRock tried to buy up all the houses in Denmark, and they passed a law saying they can't do that. The United States would never do that, though, because our politicians work for the corporations. Would it be a good strategy to put a call option on ARR? I'm still trying to understand how to. You're talking about in terms of buying a call option? I can't tell you if it's a good or bad strategy, because I can't. I can't give the investing advice. That's not what I do here. But I will say, if you have a reason to believe that it could go up and you're ready to sort of put that skin in the game and take that chance, then why not? Or if you believe that, if you think it's going to go up long term, you could do some sort of long term call option. I did that with Chipotle and Amazon when they both had that big dip. When the market dips across the board, that's a great opportunity to get heavily invested in quality companies that are just having a tough time. I always compare it, to silly examples like when Tupac went to jail, and he didn't get life in prison, but he got just a little bit of time. A lot of people didn't want to do business with him because he was in jail. Well, Suge Knight realized that he would only be in jail for a little while, so he went and took advantage of the fact that Tupac was having a hard time, and he sent him some money and helped him get bailed out or something. And they signed a little contract on toilet paper, I think. And Tupac ended up going to Death Row Records, which I think could have been a multi-billion-dollar company if the culture had been different. That's why in my book, The 10 Commandments of Black Economic Power, I talk extensively about economic culture. What kinds of culture are conducive to success and building wealth? And unfortunately, Death Row Records just had a terrible culture, and that's why billions of dollars was thrown out the window. Like this could have been a $50 billion company, because they were that amazing. And but Suge Knight, by going to sign Tupac when he was having a hard time, is no different from investing in property when the value's low, and then when the value goes up, you benefit from that, or buying a stock when the market's down. So when the market dips across the board, whenever there's a big broad market crash, I'm not happy about it, but I start getting excited because I say, oh gosh, I got some extra cash. Let me go ahead and get in on these really good companies while their prices are not a reflection of what I believe that they're truly worth. So I did that with Chipotle and Amazon, and it worked really well. And I made substantial investments there, and I used mostly options to do that. And the only thing that I did that I missed the mark on was I got really long-term options. They don't expire until summer of 2024. So I bought all this extra time that I didn't actually need. And so these call spreads, went way in the money, like super quick. And but I have to kind of hold them to really get the full value from the investment. But it ended up working. It worked because I just know these are good companies. They know how to make money. And I knew that the stock price, there's no way you can tell me if you have a company like an Apple or a Microsoft and they're trading at 175 or whatever, and then the price drops to 150. You can't tell me that company has dropped that much in true fundamental value that quickly. A lot of times when the whole economy has an issue, all the stocks will go down, even the stocks that don't need to go down, right? So that's something to maybe pay attention to. All right, someone asked, where am I from? I'm from Louisville, Kentucky. Let's see, what do you think about Instacart going public? I don't know much about that IPO, Picola. I think Instacart's not a bad company. If you like them, maybe add them to your portfolio if you want to be in business with them. Let's see here. Doc, did you own Chipotle and Amazon, or did you do a baked call put? I did a call spread. So if you don't know what that is, I have a stock options class. If you want to go take a look at it, stockoptionsmasterclass.com. Anyway, basically, a call spread is where you buy a call and you sell a call at the same time. So you buy a call with a strike price, say here, You sell a call with a higher strike price. And the reason you sell the second call is because you want to reduce the price. Like Chipotle calls are super expensive to buy. So I didn't want to spend that much money. So I bought one and I sold one at the same time, which allowed me to pay a lower price, but still get a piece of that upside. So, but the trade-off was that I didn't get all the upside. And now in hindsight, since, it went up like that, I wish I'd bought it all, but but you can't go through life with FOMO. You just say, you just show gratitude for the fact you made money and keep it moving. All right, so let's see. Okay. Oh, did I do a naked call or put? Well, if you buy a call or buy a put, there's not the distinction between naked and covered doesn't really matter. Naked covered matters when you're talking about selling options, because if I sell a naked call, then that means I don't own the stock. I'm selling the right to buy something from me, but I don't actually own it yet. In a way, it's like, now that I think about it, Deion Sanders, Colorado did a naked call option with Deion Sanders. They sold him on this idea that he was going to get $5 million a year, but they didn't have the money yet. They didn't actually have the money, but they knew they'd get the money. So they took a bet, they took a gamble. Maybe if something had happened, Deion had gotten sick or hurt and he had a guarantee in his contract, then then maybe they would have been in trouble, because maybe they would have had to go find a way to get the money or borrow it or something. But in a way, it's a little bit like a naked call. They pretty much sold Deion on this idea of coming to Colorado, and they said, we'll pay you $5 million a year or $30 million over the next 6 years or whatever. And what they planned on was, they said, now that we own this asset, we can go make money from this asset. So Deion Sanders was a multi-billion-dollar asset for University of Colorado, or at least $1 billion asset. So what happened was they signed him to the school. Then they start marketing him, and he next thing you know, the stadium where they couldn't even give the tickets away last year, now the tickets go for maybe I think even the cheapest tickets I saw for their next big home game was with like $300 a piece, $313, and that's 53,000 people. So that's like $16 million in ticket sales per game. Remember, they're paying Deion $5 million a year, so $16 million per game, right? And that's just ticket sales. It's not TV rights deals. You saw they were on national TV. That's worth millions of dollars every time they go on national TV. Merchandise, all that stuff. So effectively, that was a little bit like selling a naked call options, kind of, sort of, not completely, but a little bit like that, right? They or if I go to a promoter and I say, how much would you pay me to bring Beyonce to your venue? And they say, we'll pay you X amount of dollars, $2 million. And I say, okay, well, give me a $500,000 deposit and I'll get Beyonce. So then I take the 500,000 and then I go and I negotiate with Beyonce and say, I'll pay you $1 million to perform here, or $500,000 or whatever. And then I go and I close the other end of the deal, but I do it in kind of an awkward way. So it's very risky, right? Because if Beyonce does not agree to perform, then I'm screwed. I've taken money for something that I can't really deliver. So in a way, you're robbing Peter to pay Paul. That's why naked calls are so dangerous. That's why I don't teach it. I don't do it. I don't recommend it, because if things go wrong, you are screwed. Another area where you could really be screwed is if you go short, if you short stocks. When you short stocks, the problem you have with that is that your losses become basically unlimited. So shorting a stock is very dangerous, but the way you can kind of balance against that is maybe you buy a call option to protect yourself in case the stock just goes way up. Because remember, if you short a stock, you make money if the price goes down. Basically, what you're doing is you're selling now with the commitment to buy back later, right? So you remember, to make money, you want to buy low, sell high. So if I short a stock and I say, I'm going to sell it at 60, but I'm going to buy it back later, hopefully I can buy it back at 50, and then I'll make the 10. Right? Well, what if the stock goes up to 70 and then goes up to 80 and then goes up to 90, 100, 150, 200, 300, 400, 500, right? I'm bleeding money. I'm getting killed. And that's what the GameStop debacle was about, right? Where they were trying to short squeeze the short sellers and force the price up so much that they were going to lose billions of dollars, and they did lose money. And that's where the corruption of Robinhood came into play, because Robinhood had a relationship with a company run by one of these super rich hedge fund guys. I can't remember I can't remember the name of the company. I want to say Capital something, but it was in Capital. It was I don't remember the name of it. Anyway, so the stock, they did something where I think they said you could sell the stock, but you couldn't buy it or something. I mean, just something terribly corrupt. So they basically kept the price low so that this company could get out of the deal, so they could get out of their short position. And they were accused of corruption, and I believe that they were corrupt. I totally believe that there was some collusion there, but you know, I guess if people on Wall Street, they get away with stuff that regular people can't get away with. Um, okay, let's see. Dr. Boyce, what do you think about stock in car charging stations? Yeah, okay. We talked about ChargePoint. Now I gotta go double check exactly what they do in the EV space, but ChargePoint was one of the stocks that I liked in that space. And there are EV stocks out there that you can take a look at, or and stocks that connect to the charging station. So ChargePoint is one, but there's many others out there. Let's see here. I own PTLO. It's gone down from when I bought it at 2090. I should have done a put option, not knowing if I needed to sell or buy a put. Option wise, what should I have done? Is PTLO a good company? I own 100 shares. PTLO. Let's see. PTLO. Make sure you diversify. Portillo's. I don't know about the stock, but they got some good food. I love Portillo's. Me and my wife love Portillo's. We eat there all the time. I like Portillo's. It looks like the stock's having a rough time, but in fact, I like it so much. I just bought some shares. I just bought some Portillo's too. So I'm in there with you. Yeah, sure. I mean, I'm not saying that, I'm not going to I can't give investing advice on this, but I'll say, yeah, why not? It looks like the stock is having a rough time. They have very high quality food. The analysts seem to like it. So I think I wouldn't blame you for wanting to either hold or buy more. But remember, don't fall in love with any one stock. That's the key. That's the biggest thing about investing. I don't think you should ever get emotionally attached to any one investment. You just, buy into it, and if it doesn't work out, you adjust, right, and just keep doing that. I probably own shares in, I'm gonna guess 250 companies or something like that. So if you ask me what am I invested in exactly, I can tell you generally about my portfolio, what my big positions are, but I can't remember every position that I have, because if I see a stock that I like, I just buy some shares in it. Because the other thing too is that buying stock with your money is better than spending it, because if you spend it, it's gone for sure. At least if you buy an asset, you got a chance that money's going to grow, or at least protect itself and maintain itself, right? So owning stock isn't just an opportunity to make more money. It's also what in economics we might call a store of value. So a store of value means that you're just almost like putting your money in a bucket. At least you'll have something to show for it. So even if you buy a bad stock and the stock goes down 20%, but you hold it for 5 years, well, at least 5 years later, you'll have something to show for your money. Because if you spend your money, you'll have nothing to show for your money. You won't remember what you spent it on. But if I buy a stock, and even if it's not a great stock, even if the price stays flat or goes down, at least I have something to show for my money. So, the step to wealth, in my opinion, isn't just going from wasting your money to making all this money. There's a middle ground. The middle ground is to at least reduce the amount of wasting that you do. So one way I reduce my waste is when I get extra money, I don't buy fancy cars. I don't buy $3,000 suits. I don't want to go to the club. I don't do, there's nothing to do with my money except invest it. And that's what I do. I just invest, on a regular basis. You want to make it a habit. If it becomes a habit, then you'll naturally build wealth, because it'll be as simple to you, or as common to you as like going to the bathroom or eating breakfast. Okay, let's see here. Do I like ARM and ARM Holdings and Instacart are planning to go public? My thoughts. You know what? I don't have an opinion about either one of those companies. But let's look up Instacart. Let's see, Instacart IPO. Okay. Oh Lord, Instacart is in free fall as its valuation plunges. So it looks like the stock is not doing well. Looks like the IPO might have been overpriced. That does happen. Let me see here. Let me see if I can get a chart of Instacart stock up here. Instacart stock price. And this just shows you that getting involved in an IPO is not always, Sorry, I'm reading these articles here. Getting in on IPOs, it's a little bit overrated. I mean, I know that everybody wants to get in because they hear these stories about stocks that double in price and stuff like that. I'm just telling you, I don't, I don't jump out and get excited just because there's an IPO. Let's see. It looks like the price, they said the IPO, okay, officially kicked off Monday, $26 to $28 a share. What's the stock price now? Let me see. Instacart. Let me look it up. Instacart. The ticker symbol's CART. Oh, if you're interested in, wait, but I thought it was, so it must be next Monday then. But then how's it in free fall? Why did the article say that the stock price is in free fall? Yeah, you know what? I don't have any special information about Instacart, so I can't really tell you whether or not this is an IPO that I would invest in. Let me see if the Wall Street Journal has any information on it. Let me see. Let's see if we can form an opinion here. Let me dig up. I think I have a subscription to the Wall Street Journal. Instacart. Okay. It looks like they're looking to raise $9.3 billion. And IPOs are important for companies that want to raise money and stuff like that, and secure capital to be able to grow and maintain themselves. In fact, Walmart, I was listening to something about Walmart and the history of Walmart today. And Sam Walton was in a position where he had a lot of debt and a lot of expenses, and he needed financing. And he went to his bank and said, I need $1.5 million or this company's not going to survive. And they told him no. And so he got in his airplane and he flew. He was a pilot. And so he flew his airplane right to the bank to ask them personally. They said, no, we're not going to loan you any more money because we don't think your business is going to succeed. And so then he got on another plane and flew to New Orleans to another bank the same day. And they gave him the 1.5 million he needed. And that's what kept Walmart alive. So when you see a business that's in distress, always know, because we had a lot of questions, that I've been asked about things like the Tulsa Real Estate Fund, stuff like that. And one of the things that really, one of the narratives that seemed to dominate was that the fund should be killed and that it's no good and that everything's corrupt. And I don't know if that narrative is completely proven. I think it's more so a matter of faith and belief. You get to a point where when a business is struggling, there might be some parties who say, you shut it down, it's not going to do well, let it go. And then there's some people who say, just give me more money, give me more time, I can make it work. So when I checked out I don't keep up on every detail of the Tulsa Real Estate Fund, but I did see some of the presentation that Jay Morrison did. And I heard him saying things. I watched a little bit of the Zoom, and I heard him say, we just need to raise more money. If we get more money, we've got these projects that are moving. We just need more capital to continue to keep them going. And this is kind of a common thing that business owners run into. And so Sam Walton ran into that issue with Walmart. He said, look, I got this business. I think it was $2 million in debt. He was making about a $600,000 profit, which is hard to deal with that much debt, with that much income. And he said, I just need to borrow more money. And so the bank gave him the extra 1.5 million. And that's what kept Walmart alive. And then what happened was eventually they went public and they were able to raise maybe a few $100 million. And that allowed them to really expand and grow and strengthen the business model. So access to capital is a really important part of running a business. So, I would encourage you to just keep that in mind. And then if you can't raise capital, you have to run your business in a very efficient way, in a very capital efficient way, because you don't have as much margin for error. You make a mistake or two that could cost, everything. The business falls apart. All right. So Instacart is targeting a valuation of roughly $8.6 billion to $9.3 billion in its imminent IPO, a fraction of what the grocery delivery company was previously worth, in the latest sign of diminished investor enthusiasm for private growth companies. Okay, so it looks like right there they're having problems. They're not raising nearly as much money as they thought they would raise. They're set to start marketing its long-anticipated IPO as investors as early as Monday, or to investors as early as Monday, and plans to disclose the expected valuation range then. According to people familiar with the matter, the San Francisco company's plan could still change, and it is possible the range could move around. Okay. The shares are expected to begin trading the following week on the NASDAQ exchange under the ticker CART. The expected valuation on a fully diluted basis is a far cry from the roughly $39 billion Instacart garnered in its fundraising round in 2021, the year it started laying the groundwork for a public listing. Since then, the valuations of high growth startups have fallen as interest rates rose, making riskier investments less attractive. Okay, so here is let's see. Kevin Brooks says, I think Jay Morrison's being sued over the Tulsa real estate fund under accusations of fraud. Yeah, he probably is. I don't know about the lawsuits or the specifics of them, but yeah, I mean, when there's that much of a stink about a business, then it draws attention, right? And people file lawsuits, things like that. So I look forward to seeing what the results of the suits are. I don't know what those results are going to be, but I'll say that if you believe something, you got to prove it. You can't just say it, you have to prove it. So I'd be curious to see what they would actually be able to prove. Because I don't know. I know he's got lawyers that work with the fund, so I'd be surprised if his lawyers allowed them to run things in an illegal way. But I think at the same time, there might be questions that need to be answered, and those will be answered in court. Absolutely. So anyway, let me keep reading here. It says the company's stock market debut. So here's what's happening with Instacart that's really interesting. So Instacart was initially shopping the idea of doing an IPO in a different interest rate environment. This was before the Fed started really hiking up interest rates, because this was before they realized that they had an inflation problem. Since the Fed has increased interest rates, this has really shifted how business gets done in America, because you have to be able to make more money and make it faster as a young startup than you did back, say, 2015, when you could afford to lose billions of dollars a year for 5 or 6 years before you make a profit. Companies like Uber, I don't know if Uber is making a profit yet, but I know they were unprofitable for a very long time. Amazon did the same thing. There are a lot of companies like that. And Disney was pouring. I mean, Disney took the opportunity to create Disney Plus, which should have been a massive moneymaker for the company. And they made it into a big money loser because they were competing not on profitability, but on market share. They just said, we're going to pour and dump billions of dollars into the streaming so that we'll acquire enough customers. And then once we get all our customers, then we'll figure out a way to monetize and make the money back. Well, that didn't actually work. Disney is having financial problems because of their overinvestment in streaming. So this was all done during a different interest rate environment. Netflix was one of the first companies to make that adjustment. They noticed that their investors they didn't care anymore about your subscriber growth as much as they cared about your profitability. So the chickens are coming home to roost for these companies. So what's fascinating is that, I mean, think about this. Instacart 2 years ago, if you were bidding on Instacart, the total valuation of this company was $39 billion. Now it's less than 10. That's crazy. 1/4 of what it was. So smart people in 2021 believed this company was worth $39 billion. And those same smart people in 2023 believe this company is worth less than 10. Well, which is true? Because the company didn't change. The environment changed. Interest rates changed. Access to capital changed. Investor sentiment changed. Risk tolerance changed. So the same asset can have steeply different valuations in different situations. Do you follow what I'm saying? Do you get what I mean? Okay, so let's say, here's what would make me invest in Instacart if I was to consider doing that. There's nothing about the stock right now that makes it remarkable enough for me to add it to my portfolio. However, if I was to add it, here's why I might do that. If I believe that this too shall pass, if I believe that this interest rate environment is temporary, then I invest in Instacart, because I'm believing, like, you know what, companies like this, it's the same company making massive amounts of money. This company eventually, it's going to get out of jail, so to speak. It's going to, the environment's going to change and the valuation is going to go up because interest rates will eventually come down and we're going to sort of get back to normal or whatever we think. If I pass on Instacart, it might be because I believe that the changing economic environment has revealed some fundamental problems with Instacart that say that the real value actually was never $39 billion. $39 billion was an illusion to begin with. So I'm not even going to use that as a basis for what I think this company's worth, right? Sometimes that basis that you compare it to, like, so if a stock is $300 and it drops to 50, and you say, I got this $300 stock for $50. No, you didn't. You didn't. You got a $50 stock for $50. That's what market efficiency says. Market efficiency, one of the biggest theories in all of finance, says that you pretty much get what you pay for. So I'm confused about this company, honestly, in terms of what it's going to look like long term. Maybe if I invest, remember Warren Buffett says you should invest in stocks for at least 5 to 10 years. So if I'm a long-term investor and I'm diversified, then what will generally happen is that over the next 5 to 10 years, my wealth, my portfolio will move in the direction of the U.S. economy, which tends to be positive. It tends to be good. Is Instacart going to go up in the next 5 to 10 years? Nobody can really tell. So I'll read a little bit more and I'll kind of give you, if anything else pops up, I'll let you know. So it says the company's stock market debut is a bellwether for the IPO market, muted for much of this year and last, and will be closely watched by investors, bankers, lawyers, and traders. It will follow the highly anticipated offering by British chip designer ARM, whose shares are expected to debut this week in the biggest U.S. IPO of the year. Marketing automation platform Klaviyo is also set to launch its roadshow this week. Founded in 2012, Instacart sends couriers to grocery stores to pick out and deliver orders to customers' homes. Okay, that's a good service. I could use that. The company has raised more than $2 billion in venture capital funding over the years and has long said it expects to go public. Instacart filed coincidentally to do so last year and had planned to list its shares by the end of 2022. It pulled back on those plans last fall, pointing to tumultuous market conditions. So what they're basically saying is that we're thinking about coming outside, but we found out that it's raining. And because it's raining outside, we want to wait until the sun comes back out. Now they're still going to come outside, but the sun isn't completely out. It's still a little bit gloomy, but it's not a thunderstorm like it was last year. So they're going ahead and making this move. But there could be the possibility that some companies are saying what's happening also now is that some companies are watching them go outside and they're waiting to see what happens, because investor sentiment is a really important factor in determining what IPOs are worth. When the market is a little drunk, when the investors are making money, feeling good, going crazy, they'll pay for anything. And that's what they're looking for. They want to buy low, sell high. The whole SPAC, SPAC phenomenon, special purpose acquisition companies, that was very temporary, but SPACs could literally scrape up billions of dollars. And a lot of these SPACs disappeared. Like a lot of the valuations went to nothing, but there was somebody who got that money, right? So you have to be really careful about investing in a really hot market, in a hot climate, because when people see other people making money, they run up and everybody wants to get in, everybody wants to invest. So I would almost say that right now is a good time to just sort of get involved with investments, because I don't think market sentiment is that high right now. Fear is kind of out there. Valuations are not overall, I think, what they're going to be in 2, 3, 4 years. So this is actually a very good time to be an investor on the buy side. So, would I invest in Instacart? I don't know. I mean, it's a good business. Let's see. They revealed their financials last month, saying that they generated $242 million in profit for the first 6 months of the year. Okay, wow. Compared to a $74 million net loss a year earlier. That's pretty impressive. Their revenue increased by 31% to $1.5 billion, though the growth of its core delivery business is slowing, with the number of orders remaining relatively flat over the past year. Revenue from advertising and other businesses rose by 24% in this period. Instacart got a boost to its business in 2020 when consumers and retailers turned to the company as the pandemic spread across the country and people skipped in-person shopping. Instacart took advantage of the demand surge, raising multiple rounds of funding. Okay, so it looks to me like Instacart just has expansion plans. They're probably going to use this $10 billion to really grow and take their model around the world. It looks like a very solid business model. Would I buy in the IPO? I don't know. Why not? I don't know. Actually, now that I've read this report, what I'm gonna do? I'm gonna get in my phone and I'm gonna find Instacart, and I just told Robinhood that I am interested. So this is not investing advice. This is me just saying that I'm interested. But at the same time, I'm going to watch the IPO and see what happens to the price once it goes public. Okay. All right, guys. So we talked for about an hour, and I'm gonna answer a couple more of your questions, then we can head on out for today. Don't forget that Prime class meets tonight at 8:30 Eastern. And also we have a social media platform, in case you guys don't know, called Black Enough. You have to apply to join, but of course, Black Business School students, you guys can get in. But it's gonna ask you a few questions to see if you're eligible to join. It's spelled Blaggenuf. I put that in the chat. Blagging Blaggenuf, and it operates a lot like Facebook. I'm not really going back to Facebook. I don't really want to. It's actually, I've actually enjoyed being off of Facebook. So we have this platform. There's about 50 something thousand intelligent Black people there. So if you want to be in that space, feel free to go and join. Aisha says, I love it. I already signed. Yeah. I saw you, Aisha. So we literally vet each person as they come in. And then what happens is members have the ability to invite other people to apply to join, but that doesn't mean they automatically get in. They literally, each person, we look at the way they answer the questions, because we have to block out the spam bots and stuff like that. So but it's really cool because it'll let you actually find other B1 people that live in your area. There's a little link you can hit that will allow you to see who lives near you, so you can meet up and form groups. Also, I'm going to do a class over there or something like that, just so we can get used to sort of hanging out on the platform. Let's see. Do you believe in taking out a mortgage or buying a home outright with your life savings and then starting to replenish the savings? No, I don't do that. Again, not investing advice, but the problem with buying your home with your whole life savings is that you become cash poor, and you're not liquid in case you need your cash. So no, I'm not a big fan of doing things that deplete my cash. I think having access to your cash is important. Black Enough is spelled Blaggenuf. Somebody type that in, please. Blaggenuf. Blaggenuf. All right, two more questions and then we will head on out. Doc, I buy stock in chunks. Is that wrong? No, that's fine. Meaning I don't diversify. Okay. Well, diversification is one of the most important rules of investing, but you don't have to own a ton of stocks to be diversified. If you have at least 10, then that's a good start. I remember in school learning that 20, like literally it's like 22.5 stocks make you adequately diversified most of the time. But actually there are people who deviate from that rule. Warren Buffett puts a bulk of his money in just maybe 5 or 6 of his biggest holdings, but he does have investments in a lot of other areas, right? So he's probably more diversified than he might get let on. But there are some people who sort of deviate from that rule. Like I deviate from the rule because I own far more stocks than you need to be diversified. I just like to spread my money out. I like the idea. Investing isn't just a way to make money and create financial security. It's also fun for me. I love being a Black man who owns businesses. I just, that makes me feel good. I feel proud. I can tell my children what companies we're invested in, what businesses our families in. This sort of very prideful talk about your legacy and who you are, that's really important. You want your children to know that they're inheriting something that's meaningful and relevant, right? So tell them, go buy you some shares of McDonald's and say, our family owns a piece of this corporation. Like our family owns part of McDonald's. We own stock in Amazon and AT&T. It could be one share, right? But everything starts somewhere. Everything starts in the beginning, right? So start the beginning if you haven't done it, and be proud of that. And don't think that it has to always be about the money. I don't think it should ever just be about the money, but the money does matter, right? Let's see here. Latanya says, I buy ETF VOO, which gives you instant diversification. Yeah, you can do I call them like financial multivitamins. So if you do like the $5 a day investing plan, which you can find at my website, boycewatkins.com, or you can also text the word stock to 31996. If you text stock to 31996, I'll send it to you that way too. Basically the two assets that we talk about for the $5 a day plan are VOO, Victor Oscar, or SPY. That's Sierra Papa Yankee. SPY. Those are two mutual funds that give you broad exposure to multiple stocks. So mutual funds do a great job of that. Last question. Thoughts on Lucid? I noticed you like Neo as an EV. Yeah, I like Neo better than Lucid. I can't think of anything that might have changed my mind about Lucid, but let me just take a quick peek to see if anything stands out. Yeah, I like Neo. Lucid, meh. Let me see here. But maybe I'm wrong. Maybe I'm getting the word mixed up with Lucifer. No, because I don't like Lucifer. Yeah, Lucid doesn't jump out at me as a strong. No, I'm not a fan. Yeah, I think there's better EV companies out there, in my 2 cents. Okay, guys. So let's see. Claudia says, I'm in the UK. Can I text for the stock alerts? You could try, but it may not work in the UK. But it's okay, Claudia. Another way to get connected, go to my website, boycewatkins.com. You can find you'll find some stuff at the top that can connect you. Also, my books are there and stuff like that. Also, I hope you will be joining us at the All Black National Convention. It's going to be October 20th in Atlanta through the 22nd. It's going to be so much fun. We have spent a whole year planning this massive event. It is the greatest, most spectacular, extraordinary event for intelligent Black people on the planet. We have the group from Rock Nation that's going to perform, Victory Boyd's family. They are so good. They had people just jumping out of their seat, but it's not just about the performance. It's also about the knowledge. So we've gathered over 40 leading thinkers and experts on a multitude of areas, from everything from relationships and politics over to crypto and stock market investing and real estate and everything else. And it's really going to be a lot of fun. And also it's a great way to connect with other people. I guarantee you're going to have a great time. So feel free to go to allblacknationalconvention.com and you can take a look. If you have a business you'd like to promote your business there or something like that, we have that. We have some promotional spots available, or you can just attend as an attendee. Bring your family. Claudia says, I'm reading your 10 Commandments book, and you have the fire emoji. Thank you, Claudia. I'm flattered by that. Yeah. Read the reviews. If you guys want to read the reviews, I put my heart and soul in this book, and I know it works. I have no doubt that it works. In fact, now Claudia got me all pumped up. I'm feeling myself a little bit now. I hope that's okay. I'm kidding. I'm just excited about what we're doing, because I think that what we're doing is powerful, transformative. When I wrote the book, it was a book that kind of let me know or reminded me of that, how close to my heart this stuff is, and how instinctually connected I am to this stuff, because it kind of came out of me. It just flew out of me, and so when God and the universe is just saying, okay, put this on the page, it's like it just flew out. I wasn't trying to fit a formal protocol or anything like that. I just wanted to be honest and direct and as simple as possible. And literally, when I look at this, I have so much faith that this does work. I've just seen so many examples. I've studied our community, and the things that challenge us, right? The things that kind of block us from the wealth. And I look at almost every situation, and I'm saying, like, oh yeah, a lot of money gets lost right there, because if they had stayed married, then their kids would have been in this position, and this would have happened, that would have happened. Or if this guy had not gone to jail, then his mother would have not had to go bankrupt because she spent all her money trying to bail her son out of jail, right? Just these little things like that, things that we think have nothing to do with money or wealth. It's huge. Or even people's choices. What happens when you graduate from school as an 18-year-old and you don't have any marketable skill? And then next thing you know, you're stressed, you're feeling financial stress, financial anxiety, but it's because you have to figure out a way to get money. So you do whatever you have to do. But the thing is, you don't have a lot of options. You don't really know what to do, right? So it's very tough. It's just really tough. So these little commandments, like, number one, always being an asset to your family. And I explained that in detail. It's not just like a rule. It's more like a mindset, right? Like, if I'm an asset to my family, I don't necessarily have to have money. That helps. I don't necessarily have to have skill. That helps though. It's attitude, right? It's an attitude. If I show up when I show up with my parents, what I try to do is I say, how can I help? What can I do? How can I make things better? Is there something I can bring, but that's very different. You imagine somebody who shows up with the complete opposite attitude, complaining, negative, taking things away, taking from their relatives, right? Depleting others, right? It's energy, right? A lot of it connects to energy. Number two, buy Black whenever possible. That's just a code. That's a commitment. That's a lifestyle. It's like, you know what? If my money is my power, so it's an acknowledgement that my money is powerful. My money is very important. My money isn't just, I'm not just going to give my money to just anybody. That's a self-esteem thing, right? Think about it. If a little girl is never taught that she's worthy and important, then she may be tempted to give her body to a man who does not deserve it. But a young lady with high self-esteem is going to say, no, you don't deserve access to me because I value myself. Well, the same thing is true with your money. Financial self-esteem is a real thing, and it's something that, as a core value, if it's implemented into the community, that will lead to wealth, because we tend to preserve the things that we value. We throw away things we don't value. So if you don't value yourself, you're going to throw yourself away. If you don't value your time, you're going to waste time, right? But if you value things, if you value your money, you might say, look, I only got $20, but this $20 means a lot to me, and I'm not going to give my $20 to somebody that doesn't deserve my $20, right? So that financial self-esteem it shows itself in buying black whenever possible, saying, when I give you $1, I'm transferring power to you. I'm giving you economic love. My love is worthy. Okay. My love can lift you up. So what else? Black wealth training is a rite of passage. That's, again, very conscious, intentional effort to ensure that our children must know about wealth and economics before they hit a certain age. That is not a negotiable. That's not a if. That's not a maybe. That's a definite. That is an absolute. That's as essential as making sure that they eat every day or that they go to high school. Like, there's nothing more important than making sure they get an appropriate economic education. That should be a rite of passage. That should be repeated consistently every household. You got to understand economics. You must do this. Everybody must do this. There is no choice here, right? I think little things like that. So this is where this came from. It really came from saying, like, what would a perfect family look like? A family that's just those first three things, like buying black and putting money, say, in your family business, things like that, being an asset to each other, and having black wealth training as a rite of passage. That right there is enough that that family that just does those first three things is going to be much more wealthy than most other families. Now, what's that age that they should learn wealth? Age 0 is a good start. Think about this. We don't pick a certain age that you should learn how to play basketball. If you want your kid to go to the NBA, people buy the little baby rims and the little babies playing with the basketball when he's 2. If you want your child to be religious like you and go to church, you don't say, well, my baby's not old enough to go to church with me. You take your baby to church. The baby don't understand what the pastor's saying or anything. You can leave the baby home with the sitter, but you bring the baby to church because being in church is important. That is just a critical aspect of your life. It's you bathe your child in the lifestyle that you want them to have. You bathe them in the culture, and you have to do it deliberately and intentionally and with ferocity, because that energy that you're putting into bathing your child into the culture you want them to have, it protects them from all the other cultures that are out there. It protects them from everybody else's agenda, because if you don't do it, you know what it is. Somebody else is going to do it. Somebody else is going to give your child their culture and their identity. You have to do that intentionally. And if you do this properly, and it's not just about the kids, it's really about the family. It's about the collective, about the group. If you do that intentionally, then you cannot lose. You cannot lose. So that's what the book is about. That's pretty much that's what drove me to write it. So I'm glad you guys like it. To be honest with you, sometimes I'll even read it and I'll start reading and I'll forget about something I wrote and say, I'll be like, wow, okay, whoa. And I'll start getting excited because I really I would bet my whole entire life on the ideas that I shared in this book. I will put my life on it that this works. Okay. So feel free to go take a look. You can go to my website, boycewatkins.com. If you want an autographed copy, you can go to drboycebooks.com. Just look up the word autograph and I'll sign it. My kids will ship it out. We practice what we preach. We run a family-owned business out of my house. I literally have hundreds of books right there in the other room. And when our daughter gets home from school, her and her boyfriend get together. I mentor him too. They come by and they package the books and they tell me, they bring in a big stack and say, hey, you need to sign all these books. And that's how we ship them out. And my wife's stuff is on there too, because me and my wife work together in our Black financial therapy department. And so you can, if you type the word Alicia in the search box, you can find her stuff too. All right. So anyway, I'm going to go. Aisha says, is that the Nigerian in you? Yeah, I'm proud to be part Nigerian. I'm about 43% Nigerian. So that's, Nigerian culture was actually rated as one of the most successful cultures in terms of raising successful children and highly educated children and stuff like that. It comes down to like having a sense of pride in who you are, a commitment to education, and a commitment to delayed gratification. All those things go a long way. All right. Yeah. So I'll see you tonight, Errol. If you want to join us tonight for Prime class, where we talk about selling stock options, stuff like that, just go to boycewatkins.com. There's a training called How to Make Money Without Working. You can take a look at that. And at the end, you can get an opportunity to join Prime if you'd like to join. Let's see. Jay Diamond says there's so many imposters. I can't find the real Telegram group. Yeah. Just go to drboycetelegram.com. I can't remember how many people are in there now, but if you go to drboycetelegram.com, it should take you there directly, or also on boycewatkins.com. The Telegram group is there. My website just has a lot of, we put a lot of our stuff there. So that can be a hub if you're ever looking for something. Latanya, do you have dates for the Africa trip? Not yet. We're still negotiating that. But once that gets done, I will let you guys know. We're planning to possibly go probably in the spring, maybe late spring. That's what I'm guessing. We'll start with Egypt. I think Egypt would be a good place to begin. All right. So anyway, I'm going to get out of here. It was great to see everybody. I hope this conversation was beneficial to you. Love you, respect you. For the Prime students, I'll see you guys tonight. And have a great day, everybody. I'm going to go take me a nap because I'm tired. I've been traveling all night. I ain't even really had no sleep. All right. So I'll see y'all later.